At the end of the week, we got the jobs numbers, and they were a little light on the number of jobs, 187,000 as opposed to 200,000. A little heavy, actually, on the wage increases. What do you make of them?
Look, nobody should change their minds fundamentally on the basis of these numbers. They were pretty close to expectations. As you said, economy was softer and inflation was a bit stronger than expected, so that's not terrific. But again, not a big deal from these numbers. Look, I think the big story here all along is we're trying to land the plane on the runway, where we're worried that the plane would crash short of the runway. That certainly does not look like it's going to happen. We've got a very strong economy, and we're worried that the plane will overshoot the runway. If you look at wage inflation, it was faster for the month than for the quarter, faster for the quarter than for the year, and running for the quarter at about 4.9%. That's not consistent with 2% underlying inflation or close, and unemployment ticked down, vacancies ticked up. We still have a tight labor market, a very tight labor market, and with 187,000 jobs created and population growing 50 to 100,000 a month, we have not just a tight labor market, but a tightening labor market. Now, it's true, as some will point out, that we're tightening relative to a tight state at a slower rate than we were before, and that's encouraging, but fundamentally the plane is not yet on a trajectory to a soft landing within the runway. And
well, let's continue with your analogy about the plane trajectory. Where do we need to get on the right trajectory, to get to 2% within some reasonable period of time? What sort of numbers do you look for example, in wage increases? Right now we're going about 4.4% year over year. What sorts of numbers do you look for on unemployment rate? What are the key factors in figuring that trajectory?
So part of the issue is that it's 4.4 year over year, but it's 4.9 quarter over quarter, and it's probably closer to 5.0 month over month. And so it's not that it is on a decelerating path.
But does that suggest inflation may bounce back up?
Broadly, inflation is the difference between wage growth and productivity growth. And you can argue about where productivity growth is going to be. I would guess, but it's anybody's guess, somewhere between 1 and 1.5%. So that would tell you that the kind of inflation we're having is wage inflation we're having is pointing to an underlying inflation rate in the 3.5 range, and it may not be decelerating. Those are numbers I'll be watching closely. I'll be watching the core inflation numbers. Look, there's no necessary unemployment. Nobody wants to see any unemployment, certainly not any increase in unemployment. But what we know is that if we don't contain inflation, it sets the stage for all sorts of very serious problems elsewhere. And I don't think we can yet be confident that we're not going to see a reacceleration of inflation at some point down the road. And that's the thing that I'm focused on, not some precise numerical target for inflation, but whether there's a sense that this is under control. And I think we'll have to wait and see. Again, the numbers have come in a bit better over the last few months than I would have guessed, but I find the declarations of victory by some to be substantially premature. I'm glad that the Fed is not among those who are declaring victory, and I find the idea that this vindicates the view of those who have been unconcerned about inflation all along to be a bit bizarre, since what we followed was very different policies than the ones that they have been pushing.
So another development this week was the Fitch downgrading the U.S. sovereign debt, and also the Treasury saying they're going to have to borrow more money, which really roiled the bond markets, I think it's fair to say. You really saw, particularly in the long end, it came up a bit. You've already said you're not so sure Fitch in and of itself is that significant, but is there a fundamental underlying issue here? You're out here as one of the leaders of the Aspen Economic Strategy Group, and there's a lot of discussion now about what's going on fiscally with the United States.
Look, David, I have written and said that I don't think we're on a sustainable fiscal path. I think the Congressional Budget Office is pretty pessimistic. It thinks the deficit's going to be in the 7% range once we get out 8 or 10 years, and they think we're going to be reducing defense spending relative to GDP. I think that's wrong given the threats we face. They think that Treasury bill interest rates going to average in the low 2s. I think that's not close to right given the strains that we face. They assume, because they're required to, that all the Trump tax cuts will phase out. I don't think that's going to happen. They haven't really fully recognized that revenues are coming in well below expectation this year. I think if you do the forecast right, you're looking at a number close to 10. I don't think the United States is going to tell bondholders they're not getting money. I think the fact that we worked through, even in an incredibly toxic political environment, the debt limit settled that issue. I look at so-called credit default swaps on the United States, and they haven't moved. So I don't think Fitch really is contributing usefully to the debate here. I think they're just sort of flailing for relevance, and in general, rating agencies have not proven very prescient. They tend to follow markets rather than lead them. But I do think for anyone who's concerned about inflation, for anybody who's concerned about our resilience as a country and as an economy, you know, we talk constantly these days about the importance of resilience. Well, if you think about a company or you think about a household, not being leveraged to the hilt is an important part of being resilient. And I wish that aspect of resilience would preoccupy our policymakers as much as the ones that can be translated into arguments for creating some jobs in Ohio. Because I think that's something that is a very, very important aspect of resilience.